Hi there, Serial Trader here. Let's check in with the major US indices, and we'll start off with SPX on the wave chart. Now, I believe I did the last video Wednesday after the close. So at that point, we were looking for a tradable low. And then the next day, which was yesterday, we did have a positive day, somewhat promising. Looked like it may have been a reversal. And then today, due to the very negative reaction from Amazon and Google earnings, that seemed to be the major catalyst that people are coming up with. We opened way down, made a new intraday low below Wednesday's low, and we actually didn't make a new closing low. We still closed slightly higher than we closed on Wednesday, but overall, still a negative trend at this point. Now I'll go ahead and move this wave 5 label down to today's low, and now again, doesn't mean that is the low, but one of these days it's going to be. So I'll just keep moving it down until it is. And I did discuss the extremely bearish scenario where we're about to just break down and have a waterfall decline. Still not liking that yet. Yes, we went lower than we did on Wednesday, but we didn't go that much lower. And the selling really seems to be getting tired here. So from the intraday low on Wednesday, 26.51, today we went as low as 26.28. So roughly a 30-point lower low. I mean, it's not exactly the explosive decline you'd expect if we were really just falling apart here. And a significant intraday recovery from that low as well. We'll get to the candlestick chart in a moment, but I'm still favoring that we have this initial 5-wave decline almost complete, possibly complete as of today. Of course, way too early to have confidence about that. And that'll be for this larger impulse wave 1 down or A down. Again, we don't know the context of this decline within the overall developing structure yet. But, we still have our bullish divergence on the daily RSI. Despite making lower lows in price, we're still making a higher low in RSI. So that tells you that the downside is getting fatigued. The 4-hour, same idea. We have the 4-hour bullish divergence. And I believe on the 1-hour we still have, yes, the 1-hour we have clear bullish divergence on RSI. Just keep grinding lower, but it's getting weaker and weaker, these thrusts to the downside. So as difficult as it is to try and catch that pivot, it really looks like we're close here. So that's probably good for the wave chart. I'm not going to go and show you the alternate label where we're just going to fall apart in a 1 2 1 2 3 of a 3 decline. I kind of pointed that out in the last video. So if you're interested in what that might look like, you can look at that. But still favoring a more near-term reversal and then a corrective rally, bear market rally. And also we're approaching, let's see here, we are approaching, so next week we have the last 3 trading days of this month. So the month, as far as the trading month goes, is almost over. So often you get a significant pivot, a significant high, or in this case a significant low, right around that month end or the first trading day of the new month. Around that time you often get those pivots. And it looks like we're looking for a significant low to pivot off of in this case, since we are so extended to the downside. So perhaps we'll get one in the next day or a few days here. Certainly favoring it still. Okay, with that being said, we'll go to the Thinkorswim candlestick chart. And so on SPX, daily candles here, we did a doji today, so a very long upper and lower shadow, small real body. So that is a potential reversal candlestick. Now a doji could just be a pause in the trend and then a resumption to the downside, or a doji can be a reversal. We'd need some positive trading and confirmation, Monday essentially, to start reinforcing that we have a doji reversal. And what it would be really nice is if we did a doji today, then Monday we actually open lower than we closed on today, and then closed up higher than we opened. Say we did a bullish engulfing after a doji, that would be a nice buy signal under these oversold conditions. But we'll see what Monday brings. So anyways, potentially a reversal candlestick. No confirmation yet. This is the daily chart, of course. If we go to the weekly on SPX, and what do we have on the weekly? This is still looking pretty bad because we have a weekly bearish engulfing candlestick after this weak, very weak looking candlestick last week. So if this is true, if we've got a weekly bearish engulfing candlestick and that's going to confirm, then we still have another, few weeks of selling to go, just going off of that. But I have my doubts given the overall conditions where they are. I mean, if this has follow through, I mean, we're just going to slice through these February lows in no time, and possibly next week or the week after. So I'm not ready to embrace that yet, but you also can't ignore that we have another weekly bearish engulfing candlestick and closed, near the lower end of the week as well. So we'll go to the monthly chart as well, and this is looking horrible. So the month isn't over yet, but you know what? There's only 3 trading days left in the month, and I just don't see us doing enough to negate the current monthly bearish engulfing that we have here. I mean, we might make it a less severe bearish engulfing if we can get up, here. We'd only engulf 2 prior months instead of currently 4 prior months. But I wouldn't hold your breath. This is a pretty strong monthly sell signal for the candlestick. So yeah, definitely looking ominous there as far as the larger trend changing to the downside. Now, okay, back to the daily. And no, I think that's good for now on the daily for SPX. Before I get into the other indices there, I just want to go over today, kind of what I did. And, well, I guess from the last video on Wednesday, I did have some calls that I held overnight on Wednesday. And then, how did this go? Then on Thursday, we had some nice, this is Thursday's intraday range here. Thursday, we had some nice positive trading, so I was able to get out of those calls with some, modest profits. But I took the money and ran because I just wasn't confident. Because the recovery high we made on Thursday, we couldn't even break this just little resistance level here on SPX, which was 27.27. Okay, we got as high as 27.22, and then we actually started selling off a bit into the close on Thursday. So in the meantime, I've just been doing like, these are great conditions for a day trader because there's huge range intraday, but you just have no confidence for carrying any kind of significant positions overnight. So I've been playing the futures, just scalping. That's been going quite well. But also today, and this is today's price action. This section here. Today we opened up way down. So we didn't break the lows on the open, but we were close. So it was kind of like, oh, are we going to hold the lows and do a nice reversal upwards after a gap down, or are we just going to break down and make new lows? So at that point, I wasn't overly clear, but I was pretty certain that we'd have significant intraday movement. So with that in mind, I bought a straddle on SPY, and it was the 266 strike calls and puts for a net debit at the time. This was close to right after the market opened. Net debit at the time of 326. Okay. So at that point, I just let the market pick its own direction. So we broke bearish. We started going down. Started going down. And then when things started looking like they were going to reverse here, we started, made a slightly higher low and then actually closed above on this 10-minute candlestick here. What I did is I sold the puts from the straddle to close them. Now I was able to sell the puts for 355, okay? So I was able to sell the puts for more than the initial debit of both the calls and the puts. So I was already profitable at that point. And I chose to leave the calls open. Here you go, the put fills at 355. And compare that with the 326 price for the entire straddle here. So already had a guaranteed profit on the position by selling the puts for more than the initial debit of the entire straddle. And then I said, well, might as well just leave the calls. You never know. In these, crazy market conditions, they might actually come back and become profitable. And wouldn't you know it, as the day progressed, the calls were profitable. So again, I didn't sell the calls right at top tick, but in the upper end of this range, as I saw this 10-minute oscillator start to get to the overbought condition, I saw that we started stalling here. I saw this upper wick, and then this doji. So what I do, I sold the calls, the 266 calls, and I sold them for a net price of 170. And that was actually more than they originally cost when I first bought the 326 debit straddle. So I sold the puts at a huge profit, and then I sold the calls at still a profit above the initial price I paid for them. So killed it in both directions with this, and just basically let the market do its thing, and just use a little bit of strategic timing with, okay, we got really oversold on the 10-minute oscillator, so that was a good signal, along with some reversal signal on the 10-minute candlestick to sell the puts. And then basically the same thing happened to the upside with this oscillator, and then again with the 10-minute candlesticks to sell the calls, and then you had a great position. So from the initial debit of 326, I sold the both the calls and puts separately for a net credit of 525. So that's a excellent trade, and considering just a wild market, not a bad way to do it. Now, I did some other futures trades as well, but I don't need to show those. They're just little scalping trades. All right. You can see I bought a CGC straddle, but I'll do another video to show what that's all about. So yeah, that was a successful day. On a crazy day like this, if you can have success, then you're definitely doing something right. Okay, now that being said, on this, I also wanted to point out on this 10-minute chart, and I'm not swinging any kind of market bias positions over the weekend. I don't have any big longs or shorts over the weekend, because who knows what money brings, right? Although, okay, now let's get back to this 10-minute chart. So even though we have nothing on the daily chart other than doji to try and say, oh, maybe we have a bottom in place, the bottom has to start somewhere, and of course, it's going to have, it's going to appear on the shortest time frame before it appears on, something like the daily chart. So what do we have on this very short time frame, just this 10-minute intraday chart? Well, we have a lower low at 26.28.16, okay? So we broke Wednesday's low over here. But what we do have is a pretty good intraday reversal, and we took out the high, or what was the high of the day, and also the opening of the day today. We made a lower high, okay, so we still didn't overcome this, we'll call this just the initial resistance level up here, which was at Thursday's highs, so 27.22. That's a level we definitely need to get above to try and start embracing that, okay, we got a tradable low in place. But we have a lower low, we have a lower high. Now we have what looks like a corrective decline, okay, contained within this parallel trend channel, maybe a zigzag or something. And we have a pivot off the 786 retracement off of today's, low to high range. And we're starting to come out of the channel, and then basically the trading day ended there. So it's possible that we have our first higher low in place, and that we're finally starting a new uptrend. But we have no confirmation of this, even on the shortest time frame here. We have to at least get above this level to make a little higher high, and then ideally also get above this level to start actually breaking some resistance levels. So first level to look for to break to the upside would be 26.92.38, and then after that you really want to see 27.22.7 get broken, and then you want to just see a series of higher highs and higher lows starting to develop. So we have the very, very early makings of a potential new uptrend forming, but absolutely zero confirmation, zero confidence at this point. But something to be looking for. It has to start somewhere, right? And it's gonna, it's gonna start on the smallest time frame before you really see much happening on the daily chart. So with that being said, we'll just go back to the SPX daily just briefly. So what we need to see on the daily chart, we need to actually get above the daily T line, maybe do some sort of, no, we have a potential reversal signal, but maybe do a bullish engulfing, some sort of candlestick buy signal, get above the daily T line, and then we can start looking higher in a corrective rally with some confidence. But right now, really no certainty there. So with that being said, let's go to the Dow Jones Industrial Average. And Dow looking very similar. Dow actually just made this 1.32 reverse fib target. Well, made it on Wednesday, but we also stabbed down. Still finding some support on that today. So again, the Dow, it made a new intraday low, but it did not make a new closing low, so it still closed higher than it closed on Wednesday. And the Dow also did kind of a doji reversal candlestick, but again, no confirmation. So the Dow is very much positioned the same way as SPX. And the indices right now are looking almost identical in their pattern, so very, very high correlations right now. So we'd have to see the Dow have some sort of buy signal and get above the T line, close above the daily T line to start embracing a little more upside on that, so, for a corrective rally. So on the NASDAQ composite, what do we have on the NASDAQ composite? So NASDAQ, basically another doji kind of day, small real body, large upper and lower shadow. We made a new intraday low, but not a new closing low on the NASDAQ, so very much the same as the other ones. And we just absolutely have to see some sort of buy signal and get above the daily T line to start embracing that we're going to have a corrective rally up here and that we have a hard low in place. A tradable low. Not the bottom, but a tradable bottom, right? Okay, that's the NASDAQ. Actually, I'll just quickly go back to the Dow, and we'll go back to the NASDAQ too. So I showed the Dow daily. Let's just look at the Dow weekly very quickly. So Dow weekly, also a weekly bearish engulfing. So that looks pretty bad. But we'll see. We'll see what wins here. Does the terribly oversold conditions and a mature-looking 5-wave structure win, or does the candlestick sell signal on the weekly once again win? We'll have to see. Go back to the NASDAQ. And NASDAQ weekly. Okay, NASDAQ weekly looks terrible. Weekly bearish engulfing candlestick. We closed way below the 50-week simple moving average. And also NASDAQ, I think NASDAQ monthly might be one of the worst looking ones here. Yeah, NASDAQ monthly. And yeah, monthly bearish engulfing. Engulfing 1, 2, 3, 4 prior months. If we got a little lower here and closed the month there, we might engulf 5 or 6 prior months, but that'd be a little surprising at this point. So yeah, the larger time frame candlestick signals are looking pretty ominous, but I'm still favoring a more near-term corrective rally. Actually, I'll just quickly go back to the Dow before we head to the VIX. I showed the Dow daily and weekly. I think I didn't do the monthly. So I think the Dow also has a monthly bearish engulfing. Yes, it does. So currently engulfing 2 prior months on the Dow. So not quite as strong of a sell signal as the NASDAQ and the S&P. I think they're both engulfing 4 prior months currently. But I mean, still a pretty strong sell signal. And if the other 2 are going down, then there's no way the Dow isn't following them along. So yeah, just thought I'd point that out. Now we'll go to the VIX. And VIX. Okay, so any clues here from VIX as to whether we're about to break down, even more than we currently did in a terrible third wave down, or are we looking for that 5th wave bottom still? Well, VIX, I'm still kind of favoring. Okay, look at this. So that wave 3 low I currently have labeled on the indices, VIX made its spike at 28.84 there. Now, even today with our lower low, our big sell-off, earnings, negative reaction and panic there. We still only went as high as 27.52, so we still have a lower high, at least intraday on VIX, than we did on the wave 3 low. So you'd want to see a weaker VIX spike on a fifth wave than you would on a third wave. We still have that in place, although we did have this slightly higher close on VIX on Wednesday. But again, today we spiked lower than we did on the wave 3 low, and we closed lower than we did on the wave 3 low. So VIX still overall is sending a message that we almost have a low in place here, a tradable low. Now that obviously would change if we explode higher in VIX and get above here and really start breaking down, but it just doesn't seem like the likely scenario at this point. But anything can happen, so be prepared in case the ultra bearish scenario is in play. All right, that should be good for now. And yeah, have a great weekend. Serial Trader signing off.